Hi, good morning or good afternoon. Welcome. I'm happy to see you all here. Our unaudited interim report presentation. My name is Aavo Kärmas. I am CEO of Enefit Green.
Hi, good morning from my side as well. Veiko Räim, CFO of Enefit Green.
As usually, we're going to present our results and expect you all also to ask your questions during a presentation. You please use a chat during a meeting, and if anything else, any questions, comments you may have, you're always welcome to email investor@enefitgreen.ee anytime you want, and all your questions will be answered by us. So let's kick it off. And so year 2023, how was it? So before making any comments specifically on 23, so it was a kind of a proof again that not every year is similar to another one in energy sector. So that we all remember an extraordinary year to 2022, which is now a history, and 23 was not a similar to 2022 at all, by all means, but we will come to that during our presentation. But in general, if we speak about Enefit Green in 2023, we continued our growth story. So last year we made investment decision for three wind and solar parks in Estonia, Latvia, and Lithuania, in total capacity 180 megawatts, and estimated capex of those projects is around 200 million euros. And as of today, we have around 500 megawatts of capacity in operation, and more than 700 megawatts of wind and solar projects under construction. And then also last year we increased our development portfolio, and currently it is around 5,000 megawatts. And all in all, during the last 3 years, we have invested made investments in around 1 billion euros in order to grow as we expect. And last year's power generation, overall generation was 1.3 terawatt hours, which was historically highest result, and then 20% more than in 2022. But we expected more, to be honest. So that we had an extraordinary events which resulted to less production than we expected, and we'll come to that later on. So the power prices. So here we have brought out the power prices in countries around the Baltic Sea, and as you can see, the prices in all countries have been dropped almost 2 times compared to 2022. So this is I would say one of the most significant how should I say, significant events what had an impact also on our results as overall. And then if we have a look on annual production and consumption in the country, so compared to 2022, we didn't see much of changes there. So at that overall consumption production last year was 593 terawatt hours, and consumption 573 terawatt hours, remaining same level compared to 2022. Same with import. That last year, countries totally imported around 20 terawatt hours of electricity, and the highlight from here is Finland. That in 2022, Finland imported around 12 terawatt hours compared to 5.6 last year, so almost twice as less, and it's mainly because of a start of Olkiluoto nuclear power plant last year. So here we show you a power forecast, power price forecast of different analyst companies. So it's Volue, SKM, and Teema. So this is kind of average combined results. So basically, what we can see from here that those analysts do not expect any kind of significant fluctuations in the power prices for coming decades. So basically we can say that we are back in a normality. We see that the Baltic power prices will kind of be in a range of 80 to 90 euros per megawatt hour. Poland a bit more, between 110 and 20, and Finland kind of traditionally being the lowest of all, around 70 euros per megawatt hour. This is, of course, the current knowledge, as we have also brought out here, that actually analysts' expectations have also dropped by 50% what we were a year ago. Now, if we come to regulatory changes in all our home countries, so I would say that it was mostly that Estonia, Latvia, Lithuania, and Finland have increased their renewable goals by 2030. Poland has not done it yet, and Estonia and Lithuania even aim to have 100% of consumption covered by renewable generation by 2030. And as well as European Union has increased its ambition from current or previous 40% to 42.5, aiming 45 by 2030. So on that slide, we have kind of brought together all major changes in renewable sector, both in European Union level as well as in our home markets. I will not go through everything here. You can read it from our interim report, but what it's all about is that the countries are looking for opportunities to increase the generation of renewables faster than it has been so far. And the same applies to European Union level, where new directive RED III was approved, which is mostly about putting a new target for industry, transportation, and also building sector, and also finding ways for a faster permitting. Last year was a historical year in Europe as such. That was the first year when electricity which was produced with wind was higher than from gas, which has been traditionally the largest source of energy or power generation in European Union. 17 gigawatt hour of additional wind was commissioned in European Union, but it is still not enough. So in order to meet the 2030 targets, average annual addition should be 30 gigawatts per year. So there is certainly a need for a faster generation to come online across all Europe. And the third factor, external factor, which has an impact on our businesses is a wind condition. So usually wind speeds are high in the first and fourth quarter. So it was also last year. Maybe not so much in Estonia, where we saw a bit of less wind in Q4. It remained was slightly higher than Q3, but Lithuania had a kind of average wind conditions. And now coming to our availabilities, which is something what we can have an effect, and then we certainly do have a focus on it. So very shortly going it through, in Estonia, the wind farms availability was 0.2 points higher than 2022. So last year it was 94.7. So it was a good result, especially in our wind turbine fleet. We even saw a higher increase. It was more than 2 points. In Lithuania, a bit less availability compared to 2022. 2022 it was 94.9. Last year it was 92.1. It was mostly affected by Šilute wind farms or interruptions in Šilute wind farm, which is operated or is currently under a full service agreement operated by GE. All the other wind farms are actually on a higher level compared to 2022. But I'm happy to say that at the end of last year, we agreed a action plan together with GE how to bring Šilute wind farms availability to expected level, and I can say that looking at the results of first 2 months of this year, we have seen already very significant increase in availability of Šilute wind farms. So I'm really happy about our team contributing to that. And moving on to CHP availabilities, last year's results was 96.2, which was kind of a more or less expected level, and it was more than 6 points higher compared to 22. But that we remember that in September 22 we had a 5 weeks break or outage in Iru, our largest CHP plant, which had a lower availability effect on low availability 2022. And the solar farms continued with an ordinary high, almost 100% level. Here is just a snapshot of 3 projects which came online last year. So Purtse Hybrid Park of 21 megawatt of wind and 32 megawatts of solar. And we have Estonian Mine Solar Park and then Zambrow farm in Poland as well. Now moving on to our long-term plan. So still, as you can see, we still have more capacities under construction and in operations. So that we shows our kind of fast growth. And by the end of 25, we expect that our operational capacity will be above 1.22 gigawatts, and our near-term pipeline is around 511 megawatts. We will elaborate later on. Now, if we have a closer look on our projects which are under construction with total capacity of 709 megawatts, just to bring out few things from here is a Tolpanvaara wind farm in Finland, which is should be fully operational or Q1 by the end of Q1 24. So currently still the final adjustments are ongoing in wind farms. Most of the turbines are already producing electricity. Final adjustments should be made by Nordex, who is our supplier. When next project, Akmenė wind farm in Lithuania, which had this unfortunate collapse of a turbine in May last year, which had I would say, significant impact on our less electricity production. What I mentioned at the beginning. So as our annual production was 1.3 terawatt hours, so Akmenė itself only was kind of contributing around 100 gigawatt hours less production compared to what we expected. So currently, all 13 turbines out of 14 are producing electricity. It's already from the end of last year. All the park availability is really good. We are happy with that. And then this collapsed turbine, we expect that should be in operation by the end of April this year. And our current focus is purely on getting it online. So that certainly we had also a financial impact due to less production, and we certainly will stand for our rights how to get compensated in the future. And then last but not least, to mention Šilalė 2 here, I mean, also all the turbines up and running, so final test, grid test should be made in due time, so nothing special here. And same goes with the rest of the project. So at our largest project, Sopi-Tootsi wind farm, we expect that first production should be delivered in Q4 24. everything's currently going well. We even expect to get it online even faster. This is the target of our development team. So moving on to our near-term portfolio. So this stands out of 150 megawatt of onshore wind and 361 megawatts of solar. So with those projects, we are in some of them are really in late development phase. Some still work needs to be done in order to reach FID readiness during this year. So with those projects, we still expect that they will be, or they should gain some revenue security before making FID. Either it's CFD schemes, support schemes, or PPAs for customers. So still we continue or keep our promise that we will not execute any of our projects purely to a merchant power market. So saying that, all our under construction or in operation under construction or near-term pipeline capacity as of today is slightly above 1.7 gigawatts. And our long-term pipeline, here we also have some news. So that happy to see that we have also managed to increase our long-term onshore wind and solar portfolio in most of our home markets. With Liivi offshore wind farm, we are conducting final studies and expect to submit the EIA report at the end of the year, beginning of next year. And the good news, I have good news, bad news about the Loode-Eesti wind farm in Estonia, which has been under development quite a long time already. But happy to say that at the end of the last year, our EIA report was approved by Ministry of Climate, which is really a crucial and important milestone in order to go to the next phase of a development. But the thing is also that the local NGO has appealed to a court to cancel this approval of a ministry. So, but currently this has no kind of major effects on our actions. So we'll continue our original plan. And then last but not least, to mention from last year is that we decided to exit our biomass business or operations in order to keep a focus on wind, solar, and also storage in the future. So we're happy to say, or we're happy with the result, selling by the CHP at Valka CHP to Utilitas, Estonian utility company, and then Brocēni operations to Varmeston, who is also Estonian origin pellet producer. So that with Brocēni, the deal is closed, and we by then Valka we are still about to close it in really short time. So that was it for a while from my side, and I'll give it over to Veiko.
Thank you. So let's go through the financials. So first of all, Q4 2023. So as we have been reporting, our electricity production was 430 gigawatt hours, which was 42% above last year's. But it is fair to say that our expectations were quite a bit higher. So while this included around 112 gigawatt hours of new production and even the existing farms were also and other assets were also producing 3% above last year, then actually our expectations was quite a bit higher. So we counted that roughly 170 gigawatt hours more we would have expected to produce, and really behind it is on one hand the low wind speeds, on the other hand the availability matters that Aavo mentioned, but also the slower coming online of our on the production assets. So this is something that we are working now very heavily to bring them online as fast as possible. So in terms of the price that our every gigawatt hour of electricity produced earns, so that was 81 euros per megawatt hour. We express it in such a way that it takes into account both revenues that from the sales of power, renewable subsidies where we still have any, also the guarantees of origin, but also it takes into account the purchases of power that we do for servicing the power purchase agreement or balancing energy. So 81 euros per megawatt hour last quarter was 50% below the extraordinary Q4 of 2022. And as a result, if you look at operating income, EBITDA and net profit, they're all around 16 million euros lower than in Q4 2022, being 29.6 million euros of EBITDA and 19.1 million euros of net profits in the recent quarter. Now I would turn to electricity prices and volumes that we sold. So let me start from the top right hand side. So you can see that our production was indeed 413. On the sales side, the two green bars, 273 gigawatt hours was sold under the PPA contracts, and then on top of that, 247 gigawatt hours was sold essentially to the market, to the exchange. And you can see compared to the year ago, really the growth in terms of volume is in the PPA side, whereas the market-based sales was about 12% higher. What has increased roughly twice is the purchases, and really that is the split in two ways. Firstly, there is the around 63 gigawatt hours of PPA-based purchases that we needed at the times when the wind was not blowing to service our obligation. And then in addition to that, there is around 48 gigawatt hours of balancing energy because actually the wind prediction 100% is near impossible, which means that there are hours when we produce less than we expected and we need to balance our portfolio as well. So this is essentially this is just the balancing energy that always is between the prediction and the actual final production. In terms of prices, if you look at the table below left-hand side, so really the one key factor to point out is the price of electricity sold to the market in this quarter, which was 64.1 euros per megawatt hour. And really this has seen quite a substantial drop, 64% compared to the last year's, whereas actually the market price itself has dropped around 58%. So the real reason behind it in Q4 is the more deeper wind discounts in our markets. So in Lithuania, it was about, actually Baltics together, it was about 22% in Q4 last year, whereas in Q4 in 2022, it was around 12%. So just the wind-based powers received less euros per megawatt hour as the prices were not as high in these windy hours. In terms of the PPA price, that has reduced a bit as well, 28% in fact. But in the latest quarter, while the volume of the purchases increased twofold, then the price of the purchase was actually 2 times lower. So actually the millions of euros that we had outflow in terms of power purchases was actually lower in Q4 2023 than in 2022. Right. If we now turn to EBITDA, so on that side, the price net impact from, if one takes together both the lower sales price as well as the lower purchase price, then is 22.8 million euros, but mainly coming from these lower price earned from sales to the power exchange. Secondly, the net impact from the quantities, I mean, we produced 42% more, so this had a positive impact. And increased in total the quantities, the volumes of sales and volume of purchases, 8.9 million euros. In terms of fixed expenses, then we in order to go through these as well, we see that the maintenance costs have increased by about 1.3 million euros in this quarter. It is due to the indexation and having more assets online as well. Secondly, we have studies and consultations expenses about 1 million impact from there. And really part of that is one-off related to biomass asset sales, about 4.4 million euros. And the rest of it has really gone to the development side to actually advance the development portfolio and bring that closer to the construction readiness. Finally, the third biggest impact, payroll expenses, it's about 0.3 million euros. So this is due to ourselves actually having more people, especially in the development teams. In terms of cogeneration segment, here main impact was that profitability of the pellet business was lower in Q4 than the year before. So the revenue was impacted more, dropped more than the variable expenses. And we would also like to point out here that as we finalized and closed the sale of the Brocēni CHP pellet plant and CHP factory, then that earned us 1 million euro of extra profit in 2023. If we take the whole year now in terms of where we are and how it comes together, as I mentioned, 1.3 terawatt-hours of production. Again, we were not where we expected. Our expectations was about 300 gigawatt-hours higher. So both in terms of the slower wind speed and also coming online of the later of our assets as well as Akmenė incident. I mean, these are all major factors that have contributed. In terms of the price that we earned for our production, 90 euros per megawatt-hour, and I'll tell a bit more about this on the next page. And finally, in terms of the total results, then our operating income earned 10% below last year's 230 million euros. Our EBITDA was close to 1/3 lower than last year's extraordinary 154, and we earned 105.9 million euros this year. And then finally, net profits 55.8 million euros. If one moves on now for the electricity prices for the full year. So again, volumes picture on the top right-hand side, then you can see that as mentioned also for the Q4, the volume sold to the market was roughly the same. Then the PPA-based sales were around 500 gigawatt-hours or higher, and on the back of that and on the back of higher production, basically on the back of the PPAs, we need to buy more to service these PPAs at slow wind hours, around 200 gigawatt-hours. And on the back of the bigger production, we actually had more imbalance purchases as well. So that's the other half of 411 gigawatt-hours. In terms of prices earned, our price of electricity sold to the market dropped by 56%, which is roughly equal to the total market prices on these regions. Our PPA price was for the full year was slightly below last year, so 4%. And what we have been communicating over the last quarters has been that the PPA volumes and the purchases to service these PPA volumes have been higher. And even if the purchase price has been twice lower, then that still in total has increased our costs to purchase that power. Right. And in terms of we will now move on to the operating income. So here would not stop for long. Key features here is higher production levels from all our segments. Both wind energy and CHP have produced more, and solar energy actually doubled in terms of production. So these were all strong figures, even though we wanted more. And in terms of the prices earned, they were lower in each of these segments as well. So essentially, what is an outcome is a balance of all of these two factors. Plus, finally, in terms of CHP segment, also higher revenues from pellet sales for the full year, waste collection revenues from Iru waste-to-energy plant, as well as heat sales. So these had a positive impact on our revenues. And EBITDA bridge, then. I mean, one core feature, if we think 2 slides back, was that actually the price we earned for the power that we sold to the marketplace was 56% lower. And as the volume was roughly the same, then that actually meant that we earned about 22 million euros less from these sales alone. And really, while some of it was balanced by lower purchase price, then altogether still the electricity price net impact as it realized last year was a net negative for us. Then in terms of the quantities, we again produced 20% higher than in 2022, and that had in net terms 15.9 million euros positive impact if you take those sales quantities and purchase quantities together. And fixed expenses 8.6 million euros higher. Well, these are really to do with the again the same fields really. The maintenance expenses being 2.5 million higher, mostly due to the indexation and higher production levels or the more assets in production. Then in terms of the studies and consultations, 2.9 million euros increase to take forward our development portfolio. Plus there is about 1 million euros of one-off costs also in these consultations due to the various projects that we had. And then finally the personnel costs 1.7 million euro impact. I mean, these are the three largest ones, and altogether finally the cogeneration segment had a positive impact for the full year, and that included 1 million euro of the sales profit. I will go through the segments quite fast. Firstly, the wind segment. I mean, all the key features that I mentioned in terms of the production growth of 21%. I mean, 529 gigawatt-hours of production came from Estonia, so that's slightly below last year's, even including the new wind farm. So that the fourth quarter really had a negative impact. In Lithuania, we produced 562 gigawatt-hours of power, so that's quite a bit more than last year's 378, as Šilalė, Türi and Akmenė had a positive impact. And finally, we had 12 gigawatt-hours of production of wind also in Tolpanvaara in Finland. So this is a small impact, which we expect to be a lot larger this year. And when we speak about operating expenses, maybe it's worthwhile to point out that operating expense per megawatt of capacity were around 40,000 euros last year for the full year. You can see that it has been 13% higher compared to the year before due to these indexation impacts that we have been having in our agreements as they come in with lags. But I think one maybe point to point out what is expected to happen in the future is as these new wind farms come online, then with the example of the first wind farm, Purtse, we can see that the operating expenses per megawatt of capacity is actually 1/3 lower roughly. Of course, it all depends whether it's on our own land or whether we rent the land. So there are differences between parks, but here we can see that there will be two impacts in the future, including also the new parks being more efficient. The CHP, maybe the point to highlight on this screen is that 37.4 million euros of EBITDA that were earned last year included the CHP-based assets, biomass-based CHP assets, which we are in the process of exiting finally, and Iru, which is waste to energy. So Iru's share in this 37.4 million euros was 29.1 million euros. So this is the ongoing and recurring EBITDA also that will be happening this year, depending on the Iru results. And then finally, all the other impacts I think have been pretty much mentioned already on earlier pages. Finally, the solar segment. Here, maybe the thing to point out is that actually two things. One is that the operating income seemingly 37% lower, but within that, actually the operating farm revenue having increased in the bottom left-hand side from 4.9 million euros to 7.3 million euros, as we have exited in 2022 already from certain low-margin businesses. Whereas EBITDA performance in 2023 was lower, then that was also to do with higher fixed costs in the solar area to support our new assets and new developments, mainly due to the payroll expenses and studies and consultations. Right. In terms of investments, we have going on too fast. 355.7 million euros to be exact. The investments in 2023. So lion's share from that went to the wind side, 315 million and 36 million to solar. And really the assets that are under construction here, you can see all the familiar names, the Kelmė 1 and 2, Sopi-Tootsi, Tolpanvaara, also various PV parks. Pretty much all under construction assets except Kelmė 2 that we just started will be expected to give their first production in 2024. So Šilalė, Akmenė and Tolpanvaara we already had. Purtse is operational, and then we expect Sopi-Tootsi and Kelmė 1 to deliver the first gigawatt hours as well as Sopi PV. So moving through the cycle quite fast. Finally, 55.8 million euros. We have the net profits, and per share it's 0.21. And taking all of the above into consideration, we as a management board have proposed in coordination with the supervisory council also the dividend for the year being 10.5 euro per share, so around 50% of our last year's profits being paid out. So this is according to our current dividend policy. Right, financing. As we have gone through the heavy investment phase, and there's at the moment around 458 million euros of unfinished construction in our balance sheet, then of course it's quite high. The leverage is increasing fast. We are expectedly higher at 3.9 times net EBITDA at the end of last year, and really the balance is that we have taken out interest rate swaps in terms of costs. We have taken out interest rate swaps in 2022. We have not added to these in 23. But we remain open to do so this year in case we see fit. And currently the interest rate is fixed for around 33% of loans. We have signed a lot of loan agreements this year. Last year, basically 505 million euros. We have currently 60 million euros as of end of the year in the balance sheet. We have debt capacity, unutilized debt facilities of 335 million euros, altogether 400 million euros of liquidity, and we're having additional ongoing discussions. So we are quite confident on 24. Of course, the return, given the amount of assets that we have that are not yet producing, are lower. So once we bring these assets online, that is expected to increase the production, expected to increase also the EBITDA we earn, and by that also returning to our assets more. Power portfolio. So this has been, I think, a focus on each of these calls quite a lot. And really PPAs are there to protect against low power prices. Of course, they, as baseload PPAs or monthly baseload PPAs, they have flip side as well, that they have risks when the power price go very high. So we have to actually spend quite a lot of time to actually describe the differences in our interim report, so feel free to have a look there. So this year we have signed 1.3 terawatt hours of power purchase agreements, which is around 60% of the expected production. If we go into next year's 25, 26, there you can see that the level of PPAs and 27 as well is around 1.5 terawatt hours, which is roughly around 50% of the expected production from the assets currently operating and under construction. So it is reducing in time. We have latest investments taken also with lower power purchase agreement coverage, recognizing the risks that they bring in the high market price situations. And the total average price that we have is for our portfolio 68 euros per megawatt hour, and it hasn't really changed a lot over the last 12 months because we didn't sign a lot of agreements, only 52 gigawatt hours. So at the moment we have a portfolio as it stands like this, and we've also brought it out in a bit more detail on quarterly fashion as well for the year 24. The 2.2 terawatt hours of production that we expect comprises of 1.2 from the operating assets and 1 terawatt hour slightly above from our finished or under construction assets. So this is really visible in this production volume graph on the left, and then behind that or beside that rather is the green bars bringing out the PPAs that we have signed for each quarter and also the respective prices. We are mindful that last year we had a risk risk realizing that we produced quite a bit less than we expected. We had quite a bit more PPAs than we ideally would have had. So this brought about actually also the higher expenses for the purchase of power. So this year we are following it very closely, and actually we have made and are making adjustments into our this year's PPAs as well. So as these are basal PPAs, they can easily be repurchased, and these positions can be adjusted. Right. I think that is really it from my side.
Yes, thank you, Veiko. So this it was year 2023. So compared to 2022, many things have changed. Name it power prices, also a bit of lower wind availability issues in Lithuania. Unfortunate Akmenė case, all that had an impact on our business results. But taking into account that there is still huge need for renewable electricity in the future in all our home markets due to new national climate plans, energy consumption is growing. Electrification is certainly one of the drivers, mainly in transportation and in housing or heating sector, which all will need more and more renewables come online in the future. And nevertheless, taking into account the results of 23, we do not see that there is a kind of a need for change our strategic approach. We still keep going on growing our portfolio. Our main focus for this year is to bring online every megawatt hour of currently under construction projects in time, so or even faster. So this is very crucial. At the same time, continuing our development portfolio, increase of our development portfolio, which is currently very, very strong. Knowing our professional and dedicated team and their capabilities, I'm really positive that we can do it even more. But at the same time, we also realize that it's not all about the growth. That we have to be mindful with our taking our risk. We have to be mindful of keeping our promises to our shareholders regarding our return on the capital. That it's always not less than 2 points on our weighted average cost of a capital, and we always follow our investment policy and investment criteria. So this is all what we do, and at the same time we also know that there is also capability for us to acquire additional capital from the market when it's needed. So saying that, thanks very much for listening, and now we're ready to take your questions. So first question, what impact do you see from EVs and heat pumps growth in coming years? As I briefly mentioned that certainly those two sectors are the drivers of a future electrification, transport and heating. So that we already see that the number of EVs is growing. It's just a matter of time, and it's a breaking point for acceleration in that, and also seeing that the heat pumps are replacing existing solutions based mainly on gas. So that this is the future. So that the only question is that how fast it will change. So, and I don't want to speculate here, but it will happen. So Latvian State Forest and Latvenergo joint project. Can you please give some comments? Yeah, I mean this is about giving an exclusivity rights to a joint venture to develop onshore wind in almost 10% of Latvian state forest lands which are suitable for wind development. I think that this is not the fair treatment of market participants. So to give such a exclusivity, so that as a Latvian state forest is currently doing auctions for the areas for wind development. So I don't see why one company should have just exclusivity for 10% of that. And then I know that there are also other market participants who would agree the same, and yeah, I just don't consider it right.
Yeah. What future steps will be taken to increase dividend versus share price yield? I think we are more of a growth company, so we don't specifically target any yield. What we've said during the IPO is that our dividend policy is 50% of payout, and really our focus is on increasing the production. That in turn expected to increase the EBITDA, also increase the net profits, and then that would create the conditions to allow for dividends, and increasing dividends in time. So yeah, this is our way.
Can you please explain more why there are so few gigawatt hours of your projects in Latvia? Yeah, which is a good question. I mean, when we need to go back a bit to a history, I mean, before Enefit Green acquired Nelja Energia, we were mostly Estonian-based company with our operations back in 2018. In 2017, we approved our new strategy, looking, or taking Enefit Green approach to go abroad to our neighboring countries, including also Latvia. We started to set our teams there and our activities. In 2018, we acquired Nelja Energia, who had the operations both in Estonia and in Lithuania. So this was kind of, I would say that organic move that we have more operations in Estonia and Lithuania, for instance. But Latvia, we have a dedicated team in Latvia. I mean, working with our developments. If you remember one of my slides, I showed you our long-term pipeline. So a long-term pipeline, we consider that those are projects which will reach to FID after 2025. So that there is also, I could say, Latvian projects, both solar and also onshore wind and also storage. And this year, we currently do have two solar projects under construction with total capacity 17 megawatts in Latvia. So that those are just kind of first signs. I mean, first marks that we do have serious plans in Latvia. That taking into account what is a share of a renewable production from a total consumption in Latvia today, we see that there is still a lot of room to increase it. And Latvia has when I'm specifically talking about the wind, good wind conditions. They have very good and solid grid, so that there is a lot of potential. So it is certainly one of our core markets. Looking at battery storage solutions for better price, yeah, I mean, of course, I mean, battery, we cannot kind of ignore this technology, and then we will have a first pilot already this year in our Purtse hybrid park with a 2 megawatt and 4 megawatt hour battery. And as we have also said before, that all our new developments are designed in a way that we can connect to the same connection point, onshore wind, solar, and also storage. So that certainly storage is a future. We see that actually the price for storage is coming down, and of course, one needs to find really a good business case for a storage. It can be either arbitrage against market prices. It can be, service offering for TSOs, for system services, and so on and so forth. So that this Purtse is for us as a pilot to learn and then study, but we have created kind of opportunities for a future development. How much interest expense do you expect
to recording P&L this year. Last year we recorded very little, as you remember. This year we in the beginning of the year still will be capitalizing most. Our interest costs, if you just take the current loan balance and the current percentage that we are paying, are around 16 million euros based on that. And as the loan balance will grow, so it will exceed total interest 20 million euros this year, we believe. But we still believe that we are likely to capitalize most of it, so it would definitely expect it to remain short of 10 million euros of P&L based interest costs. Yeah.
So the next one, have you considered purchasing projects on a market that are ready to build stage? What can you say about return profile of such projects compared to developing in-house end-to-end? The short answer is no. And why? Of course, I will explain. I mean, in order to explore our strengths, I mean, this is our knowledge and experience from operations and development, combined with our ability to finance our projects. We have decided that we have so-called vertically integrated business models, so that we plan, we design, we develop, execute, and operate all our assets by ourselves, so that we see that doing so we can create more return to our projects. Just our experience has shown that those so-called turnkey projects, which are currently operational, are too expensive. I mean, we will not meet our return targets. Hence, we are ready to look for so-called pre-developed projects, which are in in the middle way on the way to become operational. So that this is part of our everyday job. But once again, we follow our investment criteria and the return expectations here.
Yeah, next one is for me. So how much you lost with those power purchases in the last year? Have you made changes to your contracts to avoid similar risks in the future? Good question. So what we've looked at is that we went at the year at around 60% expected PPA production ratio, right? We produced less than we expected, so we ended up being more. But we have run backwards looking at what would have happened had we been 80% hedged, 40% hedged, no hedge at all. And what we have figured is that our earnings would have been around 5 million euros higher had we had no PPAs at all. So it is a substantial amount, but not higher. So last year, as the power market price realized not very far from the PPA price, then we were more or less we did less well than we would have. But actually, our main concern last year was the missing production. So this is one. What we've looked at is that these PPAs protect us in case the power prices are low, but they have both certain risks when there are peaks and especially if we have shortage of production. So this year we are managing it more actively. Let's acknowledging the risks that we have from our under construction portfolio, and we are in the process of actually adjusting these hedges as well, because these can be, as these are base load hedges, these can be adjusted on an ongoing basis, of course at market terms, and this is the way how we're approaching it this year. Next one, what was your original electricity production projection for 2023 in terms of gigawatt hours? It was around 1.60 terawatt hours, so around 300 gigawatt hours more than we actually ended up producing.
And 1/3 goes up, yeah. Okay, next one. Why didn't you participate in Estonia's Liivi 1 and Liivi 2 offshore wind farm auctions? What is Ignitis seeing there, but you are not? Yeah, I mean, currently the auctions are ongoing in offshore auctions are ongoing in Estonia. There was just a news this morning that one of the auctions actually failed. No bids were made for one site, and also with Liivi 1 and Liivi 2 were also not. I think both projects were won by kind of what we call it original bid or starting price. So the reason why you didn't participate is very simple, because we see that we do have 2 offshore projects in our portfolio, as shown before, but we see that our Liivi project, which is more kind of advanced, and both Liivi 1 and 2, and we also do see, according to information we do have about the conditions in Liivi 1 and Liivi 2, that our existing Liivi it's more competitive compared to those. So what Ignitis, I cannot speak for Ignitis, of course.
Yeah, what's the underlying index in the maintenance contracts used for indexation? Do all existing contracts have such mechanism included? Yeah, these are either CPI, BPI, or personnel cost based, and it is a tradition in this industry to have these indexed. What we can do about these is at certain points in the time when we have exit opportunities, or when we have actually the power production assets reach certain age, we can renegotiate these agreements or take lower protection level, so to speak. So as we are in second half of their lives, then we often choose to not to pay for the full protection, but rather take certain risks ourselves, which actually comes with lower price. So yeah, there are ways how to mitigate these growths in the indexes and costs as well. Then the next one is, how much capex do you foresee in 2024? We don't actually project or publish our capex predictions, but in the last call we've asked, okay, how much capex is still to go until the end of the construction of all these currently under construction projects. It's slightly above 450 million euros, and it will be split between 24, 25, and a little bit remaining in 26 and months. So this is the disclosure we can offer.
I think it's also
the Baltic power price market is transferring from hour price lots to 15 minutes price lots. Does this create more opportunity, more risk to you? Yeah, very, very good question. So this is mainly going to kick in 2025, but it's the first products will already be available in second half of this year. So it will create a challenge in that respect, that as at the moment, 1 hour is one period, and if you have more production in 15 minutes and less production in another 15 minutes, then these all get netted out for the 1 hour. So now we will have 4 separate periods. So there is a risk that the balancing costs will increase, because the imbalance you can not perfectly predict, and you cannot perfectly trade out. So there is a risk that in 2025 it is going to be balancing costs will be higher, but we're of course working hard with our partners to take all measures into account to ultimately not have our costs increase too much, or maybe even find opportunities in that, because there are also other markets and other products coming, balancing products or regulation products. So we're exploring these also. Second question, what is the leverage level you expect in terms of net debt to EBITDA for 2024? Yeah, we again don't publish our expected debt levels as well, but what we have said as our financial policy during the time of the IPO is that during the construction phases we can go up to 5 times and a bit higher as well. So we can expect to be around there or a bit higher in terms of net debt to EBITDA level this year. So as we are in probably the heaviest construction phase this year, but of course this will depend heavily on how much production we can bring in, how much EBITDA can we earn based on that production, and then as pretty much all assets are expected to be full year production in 2025, then the terawatt hours that we produce or gigawatt hours we produce are expected to be even more in 2025. So which will help us to earn more EBITDA. Also we expect.
So, do you plan to develop a hydraulic storage solution similar to what we plan and build to Paldiski? The answer is no. We do not have any plans regarding to that. But of course, we're ready to look for opportunities to work together with companies offering this pump hydro, using this pump hydro technology.
So there is one question, for me, I guess. What percentage of volume do you want to have on the PPA before FID and for how long? Historically, we've had 60% of the PPA for 5 years minimum. We've done longer. We've done 7 years. We've, maybe up to 10 years even with reduced size. But it's fair to say that we're also looking at our investment policy and whether we're contemplating different levels for different types of PPAs and revenue security mechanisms because the baseload PPA comes with risk, and it's fair to say that that probably in the future we are having a bit less of that. So we are reducing the amount of PPAs that we are contemplating as a hedge for our production assets, but we like to actually complement these also with other revenue security mechanisms. For instance, in Estonia, there are expected to be the CFD auctions, which are better instruments. In Poland, the CFD auctions are there as well. Every market actually is slightly different with their revenue security mechanisms. So each have their own imperfections, but we work through these. And I think what we have been saying still holds, that currently we don't do any investment decisions against the market purely. So we need to have some security mechanisms in place.
I think that was the last one. Last is a comment or our comment. Thanks. Financially successful year for 2024.
Thank you very much for very good questions.
Yeah, thank you very much, and see you next time.
See you next time. Thank you.
Thank you.